Hello and welcome to this episode of Macro Sutra. I'm Akanksha MIshra. Now, tariffs have been the word on everybody's minds this week, with the Trump government first announcing a host of tariffs on almost 60 countries on 2nd April, what he called Liberation Day, and then on Tuesday, 9th April, announcing a 90-day pause on every country's tariffs except for China. However, concerns still remain about how these tariffs, whenever they are reimposed, are going to affect not just Indian but the global economy. And to discuss precisely that, we have with us Radhika Pandey, Associate Professor at NIPFP. Thank you so much for being with us, Radhika.
Thank you, Akanksha.
Now, first things first, what is the status of tariffs right now? Can you just give us a short update on what was announced on April 2nd and April 9th?
Yeah, so even before 2nd April, since mid of February, we have seen that on various sectors, the Trump administration has announced tariffs. For example, tariffs were announced on metals like steel and aluminum. Tariffs were announced on auto sector and so on. And then from 2nd of April, the Trump administration announced reciprocal tariffs on a set of around 60 countries. With the objective of correcting the trade balance. So, according to the US government, they are having a trade deficit with other countries because while the US provides greater market access to exports from other countries, the other countries are not providing. So, the US is also raising its tariffs on imports from other countries. And as a result of the tariffs that were imposed on 2nd of April, the affected weighted tariff in the US rose to 22%. So it was around 3%, it rose to 22%. So that was on 2nd of April that tariffs were announced. And because on China, tariffs were announced earlier also 20%. And then on 2nd April, 34% were announced. So it makes it 54% as of 2nd of April. And since then, we've seen tit for tat happening between US and China, US further raising the tariffs on China by 50%. And as the time that we are speaking now, the current rate of tariffs on China is 125%. And then there are tariffs on other countries as well, like even smaller countries, Vietnam, Cambodia, India, all countries are subject to tariffs. And the basic formula that they have used to announce tariff is how much is the trade deficit with that particular country divided by imports from that country. So that seems to be the guiding principle for arriving at reciprocal tariffs. But then yesterday there was a complete reversal of policy was announced last night, where Trump announced a 90-day halt on the rollout of reciprocal tariffs, because on 9th April was the day when reciprocal tariffs were to come into implementation, but they were put on hold, and there were various reasons that we can talk about subsequently. But on China, tariffs remain because according to the US, China has retaliated, so they want to punish China by keeping elevated tariff rates at 125%. But on other countries, as of now, the tariff that were announced on 2nd of April have been halted, but the baseline 10% tariff remains on all countries. So there was a baseline tariff, and then on top of that was tariff based on the trade deficit with each country. So that the reciprocal tariff has been halted, but the baseline tariff of 10% still remains. So that's the status as of now.
Great. Now, coming to the tariffs, the reciprocal tariffs that were announced on 2nd April against India.
Right.
What were the sectors that were the worst hit, and which sectors were exempted? Can we talk a bit about that?
Yeah, so in general, sectors like pharmaceutical, semiconductors, copper, and energy, these were the sectors that were exempt from reciprocal tariffs globally, not just for India, but across countries. These sectors were exempted from tariffs, reciprocal tariff, and that was a comforting sign for India, because as regards pharmaceutical, India is a major supplier of pharma products to the US, as well as energy. So if we leave aside that, then there are certain sectors which are vulnerable because, though the tariffs have been halted, we do not know the future trajectory. They may come into existence. They may come into existence at a much reduced rate. But as of now, they are in existence, but they have been halted. So it's worthwhile to looking at which sectors are, possibly impacted by the rollout of reciprocal tariffs. And there we see, we need to see in relative terms. We look at those countries which are competitors of products which we are exporting to the US. So if we look at, the top sectors, top exports from India to the US, we see that there are electronic goods, gems and jewelry, pharmaceuticals, machinery and instruments, and so on. So these are some of the big sectors, and there we see, and also like apparel, textiles, and so on. But gems and jewelry is one sector which is likely to be impacted with the present state of 26%, because we are one of the major exporters of gems and jewelry products, and lately, our position, we were the top #1 supplier of gems and jewelry, but as per the last financial year's data, we have been surpassed by Switzerland. And if we look at the tariff differential, Switzerland is facing a lower tariff than India. So there is every likelihood that the market share will shift from India to other countries where the tariff rate is lower than what India is subject to. And also there's one more important insight that comes into play, the elasticity of demand. Because with tariffs, what is going to happen is that the price of that commodity is going to rise. Now, if the elasticity, that means the responsiveness of demand to prices is higher, then with price rise, demand goes down. So now gems and jewelry is a discretionary product. It's not something which is a necessity. So if prices rise exorbitantly, the demand will go down. As it is, there are these, concerns about US economy sinking into recession. The probability of recession is rising. And under such situation, the demand for discretionary items like gems and jewelry is expected to go down. So gems and jewelry is one sector which could be impacted by reciprocal tariffs if they are, implemented, rolled out in the present form that were there in 2nd April. Also, machinery, electronic goods, because there is a possibility that some of our market share shifts to those countries where the tariff rate is lower. But again, there are various sectors where we have a window of opportunity. So, and that is important to talk about because amongst the Southeast Asian countries and also ASEAN peers, Asian economies, India is subject to relatively lower tariffs. We know China is exorbitantly tariffed, but then the countries like Vietnam, Taiwan, Cambodia, Bangladesh, Thailand, all these countries are subject to higher tariff rates than India. And therefore, there are those sectors where these countries are the major suppliers. There is an opportunity for India to fill that gap because they are subject to higher tariffs. For example, we found very interestingly that sectors like footwear, in where India has a major advantage, because what we see is that Vietnam and China together account for 70% of the total supply of footwear to the US. Now, maybe we cannot compete with with China, but at least with Vietnam, we can take some part of their market share. And we already are seeing that Tamil Nadu is emerging as a major footwear hub. So there is a possibility of shifting some of the market share from such countries to India. Similarly, furniture, similarly apparel, from Bangladesh and Vietnam, some of the market share can shift to India. And more importantly, most of these sectors are labor-intensive sectors. So if the market share shifts to these sectors, then employment growth will also be positively impacted. Right. So that is the sectoral impact.
Great. And what I'm understanding from this is that we need to look at tariffs not just in terms of what tariffs are imposed on India, but also worldwide, right, to get a picture of how it's going to affect the Indian economy also. Absolutely. So can you elaborate a bit about how a global picture of tariffs helps in understanding the impact on Indian economy?
Right. So, as I said, we need to see India in a relative perspective. That is what we see. That, as I said, we need to see which are the sectors where those countries are the biggest suppliers who are taxed more than India, who are subject to higher tariffs than India. As I said, we need to look at those sectors where China, Vietnam, Bangladesh, Cambodia, Taiwan, Thailand, these countries are the biggest suppliers
Right.
because these are the very countries which are subject to higher tariffs than India. Now, if we can take some part of their market share, we will be benefited, and
Okay.
therefore sectors like footwear and furniture, apparel, both knitted and non-knitted, are some of the sectors where we can gain. Also, toys. Toys is again one sector where we can gain because right now, again, China and Vietnam are the biggest suppliers of these products. So, and again, as I said, these are most of these products where we do have a window of opportunity are labor intensive sectors. So, through a right mix of investment and policy support, it
Yeah.
is possible that we are able to garner some market share. So it can be a good thing for India. We can be positioned, in the reconfigured value chain. India's position can be strengthened if we are able to take this window of opportunity and use it constructively.
Right. But again, there is this 90-day pause on tariffs,
Absolutely.
and there's obviously a lot of uncertainty in exactly what the final impact of tariffs is going to be.
Right.
So, A, could you elaborate on this uncertainty? What are the different possibilities that could happen in the 90 days? And B, what steps is India taking? What steps has the RBI taken?
Right. So that's correct. Now, these 90 days are going to be crucial, and we do not know what is going to happen tomorrow. There is a lot of uncertainty, and the uncertainty can be gauged from the fact that there is a very important metric called Economic Policy Uncertainty Index. And if we see that index, we see that it has skyrocketed like anything. For all countries. So there is this level of uncertainty, but it's also important to understand why this 90-day pause has been announced. There could be various reasons. One reason is definitely that even the US importers are puzzled, from where to buy, what to buy, from which country to buy. And it's not very easy to fix the disruptions to the value chain that have happened due to the imposition of tariffs. So they need to calculate, they need to reconfigure, they need to recalibrate from which country, from which supplier they are going to import which commodity. And that requires some time. And therefore, I think that is one of the reasons why this breathing space has been provided so that both importers and exporters can come on table and decide and to talk about the possible concessions that exporters can provide, because it's not just tariff differential. As we previously spoke, that India has advantage. Yes, India does have an advantage, but if those very countries, as we talked about, China, Vietnam, Cambodia, Thailand, Bangladesh, if they further reduce their export prices, then our advantage will be offset. So what is going to happen? Various possibilities. It may be that they are further suppressing their export prices so that their market share is not lost to the competitor countries. That is the possibility number one. Second, as I said, that there's going to be this recalibration of value chains, which will take some time, and therefore 90 days is provided. And the third factor, which I think is a very important factor for us to understand, is what's happening in the US markets. It was expected that the US stock market will crash, and that happened. But what was not expected was that the US bond market will also crash. Because what was expected was that normally what happens, the conventional playbook is that when there is a general level of uncertainty in the market, people tend to move to safer assets, and they tend to move to US treasury yields, which are considered to be safe haven assets. This time around, that did not happen. In fact, those who are holding US treasury yields are also selling. So there is an excess supply in the market, less number of buyers, excess supply. That means that prices crashed and the yields rose. Now, when the yield rose, it's a problem for the US government because their cost of borrowing will rise, and therefore, and a lot of the reason for the surge in yields is linked to tariff, because countries like China are the biggest holders, one of the prominent holders of US Treasury yields. So now, when tariff is imposed on them and their export revenue is going to be impacted, so they are selling, they are offloading their holding, and that resulted in a sharp surge. And we see that US 30-year bond yield, US 10-year bond yield, last 2 days we've seen them touching 5%. It's a very, very extraordinary development, and that I think also led to was one of the immediate triggers to roll back the implementation of tariff for 90 days. But the concern what now is may happen is that because China is still subject to a very high tariff and other countries are tariff is on hold, there is a possibility that China is going to dump products to India and other countries because China is not able to have a market in the US, so they will dump China and even other countries. Whoever is losing market share, there will be a lot of dumping. So, in addition to the cost that tariff is imposing, what is an additional concern for policymakers, industries, manufacturers now is the threat of dumping.
Right. And that is obviously a big concern for India
For
also.
India, because we've already seen dumping of steel happening. We are seeing that China is already in a grip of deflation. So the prices are very low. So they are able to suppress their prices and sell in other markets. And therefore, Indian industries, where already we are seeing private investment is a problem, it's not picking up. The delay could be further pronounced because of the threat of dumping in not just steel and aluminium, but various other products like paper, like rubber, and other products.
Right. Now, before we get to the audience questions, let's just quickly discuss how has the Reserve Bank of India responded to this, and what is India's focus as of now?
Yeah, so that's again a very important policy challenge for not only India's central bank, but central banks across the world, because there are two opposite implications of tariff. One is that the prices are expected to rise, and the other is that growth is expected to be lower. So these are two opposite impacts, and the various central banks are now facing this policy conundrum, whether to lower the rate, whether to focus more on growth or to inflation. But in India's case, we had our policy review yesterday, and the RBI rightly decided to cut the policy rate by 25 basis points. And more importantly, it changed the stance from neutral to accommodative. So that's a very important signal to the market and to the investors that they are more open to rate cuts going forward, which means that the RBI is, as of now, more concerned about growth rather than inflation, which is correct, because if you look at the various data for inflation, right now, inflation doesn't seem to be that big a concern for India. Food prices are easing. Global oil prices are easing because of tariff, because of recession concerns in the US. Oil prices are down. So inflation is not a problem. It's just the other indirect impact of tariff that, US comes into, there is every day you are seeing various investment banks raising their probability of recession in the US. So till 1 week back, it was 45%. Now it is, 35%. Now it is 45%. So if there is recession in the US, all these, possible advantages that we talked about in furniture or toys, that will be lost, because if they're in recession, demand will be lower. So in this situation, when growth is subject to various headwinds, it is good that the RBI has decided to focus more on growth. And what the RBI can do, it has only one tool, which is the repo rate. So it can cut repo rate and also change the stance, which gives us a signal that going forward, the rate cut cycle is likely to be deeper. If they would not have changed the stance, that means that, it would have been data dependent. We do not know, it's uncertain. But the fact that they have changed the stance to accommodative means that going forward, the rate cut cycle is likely to be more pronounced.
Now, it's time for some audience questions, and we have some interesting ones this time. So first, Karthik asks, in the first term, Trump cancels NAFTA and replaces it with USMCA, saying it's more favorable to the US. Now, in his second term, he's criticizing the same agreement he put in place. What will make other countries believe that having an agreement with this admission will last long and the next US president will not come in and change the agreements?
So these are all speculative and do not know what's going to happen. And the only thing certain is that there is uncertainty, and that is going to persist for a couple of months now. We do not know in these 90 days what's going to happen, what's going to happen tomorrow, what are the kind of deals that are going to be struck, whether those deals will remain in place. So these are all very uncertain times, and it's good not to conjecture about those, but to wait and watch as to how the situation unfolds. What as India can do is to undertake reforms on the domestic trade front, provide greater market access, undertake steps to improve competitiveness so that we provide greater market access, and we garner greater market share from the US exports. Other than that, we do not know how these agreements will pan out in the next 90 days and even later.
The next question is from Aditya. He asks, do you think with this tariff increase, if inflation increases in the US, would the Fed go ahead and reduce the interest rates in order to reduce inflation? Or will they adopt a wait and watch approach? Because inflation in the US will also have a global impact on other countries as well.
Yeah, so if inflation rises, I would just like to say that the Fed would increase rates, not cut rate, because if inflation rises, the Fed will increase rates, not cut rate. And there was a statement by the US Fed Governor Jerome Powell. He said that after the announcement of tariffs, he said that tariffs would lead to increase in prices and would lower growth. What they need to see going forward is that whether this is a one-off event or is it going to have a sustained impact on prices. If it is a one-off event, they would like to see through it and not increase interest rates. But if it is a sustained increase in prices, if it leads to a spiraling rise in prices, then they would go ahead and tighten interest rates, which is going to be counterproductive in a situation where the US is already facing a threat of recession. So it's going to be a complicated policy choice for the US Fed in particular, because the US economy is going to face the threat of higher inflation as well as lower growth.
Right. The next question is from Siddharth. He asks, will inflation growth moderate if China dumps some US-bound export to India? Also, now that the 90-day pause on tariff is announced, do we expect a boom for the next 3 months and a bust after 3 months for Indian exporters because they will try to rush exports to front-load inventories of US importers?
So yes, this is important. We need to look at Chinese macro data. That is going to be a key monitorable for us going forward. And what we've already seen, there are these initial signs that China has devalued its currency in order to retain market share in the US market. And on the other side, China's PPI, which is the producer price index, and China's CPI, which is the consumer price index, both are in the negative territory. So there is this deflation problem in China, which it would now like to export, because demand in China is suppressed, and that's visible from the CPI data, which is negative. So they will try to export deflation to other countries, which in other words mean that there is a supply glut. There is this problem of supply glut because they are not able to find adequate markets in the US, so that China will be diverting some of its products to India and other Asian economies, and that will be problematic. That will further suppress prices, but it will be counterproductive. It will be harmful for our industries because they will not be able to increase their capacity utilization, because from China, cheap imports will be flooding India's markets and other markets as well. And not just China, interestingly, we may face a situation where even Bangladesh starts dumping their apparel and textile products, because they are as of now subject to higher tariffs than India. So what is going to happen? There is a mix of policy choices that are available for countries. They can lower their prices, they can devalue their currency so that they remain competitive. So there's going to be a lot of complicated policy mix. But in general, we need to look at Chinese yuan exchange rate and Chinese prices to determine our appropriate policy response. But yes, there is going to be this problem of supply glut and therefore lower prices due to the possibility of China dumping products. And we've done some preliminary analysis, to see that there are these various products like paper, like rubber, which are likely to be subject to dumping from China, because these are those products where China imports to US as well as India. So if US closes its doors, it will come to India.
Yeah, that makes sense. Finally, there's a question by Sankalp who asks, I wonder if global manufacturing has become the new agriculture, which cannot survive without subsidies and protection of tariffs. There is evidence of China substantially subsidizing production to remain the world's factory. Even in India, without schemes like PLI, manufacturing ecosystem appears to be a non-starter.
Yeah, so we've talked about the sectors where, given the reciprocal tariffs, which are now halted, India does have a window of opportunity. And there, yes, for some of the sectors, the role of schemes like PLI is important to provide incentives to manufacturers so that they have a comparative advantage. So yes, PLI. But in general, beyond PLI also, there is a whole mix of reforms that are needed, to address various things like inverted duty structure, to be more open to reduce duties on industrial raw material, so that we become a market for final goods and so on, introduce labor market reforms, factor market reforms. So there's a slew of reforms that are waiting to happen so that the manufacturing sector gains a greater share of the GDP, because not we have seen that manufacturing as a share of GDP has remained stagnant. The services sector as a share of GDP has been rising. So yes, PLI is important, but in addition to PLI, a whole slew of reforms are needed to boost productivity in manufacturing.
On that note, that's all we have for you. Thank you for tuning into The Print.